and introducing Akshay Bhagwat, who's the Senior Vice President Derivatives Research, JM Financial Services, who's joining us. Hi Akshay, good afternoon and thank you so much for joining us on Market Fatafat. Let's get going with the stocks that are in focus today. First up is BEL, that is in focus on the back of a big order win. They've bagged fresh orders worth 776 crore rupees since its previous update on November 14, 2025, strengthening its order flow momentum for the current year. Now remember, in the month of November, the company had secured additional orders worth 871 crore rupees that included fire control systems, thermal imager, ground support equipment, upgrade spares and services. And on the back of this huge order win, BEL is in focus. That was trading up almost 2% but has given up those morning gains, nonetheless holding out in the green with gains of 0.3%.
Alright, so that's BEL for you. But actually, you've picked out Asian Paints for us, and it's one of those stocks that's holding out in the green and is actually lending a lot of support to the Nifty. It's among the top gainers today. What are the charts suggesting? 0.5% up right now. What's the trajectory looking like in the week to come?
First of all, good afternoon to all. See, the technical trend for the stock is positive. The last few trading sessions has seen some bit of a corrective action with the stock dropping from around 3,000 to 2,700 and 777 where it currently trades. I think this is a good buying opportunity on dips if you are more looking from a time horizon of a month. Somewhere around 2750 is where the support lies, and I'm expecting a pullback which can see the stock moving to 3,000 levels back again.
So it could go back to 3,000 levels back again. That's the word coming in on Asian Paints. But let's move on and get you an update from the auto sector. Now, Hyundai India, this one is in focus after Citi has come out with a note and maintained its buy call, but cut the target price to 2,700. That's down from 2,850 earlier. Now, the brokerage says that it has trimmed its estimates to factor in the recent softness that we saw in volume growth. Volume projections for FY 26-28, they have been cut by about 1 to 2%. Now, Citi has also revised its margin assumption downwards, citing lower average selling price, and as a result, EBIT estimates for that matter, for FY 26-28, they have been reduced by 5 to 6%. And overall earnings estimates, they have also been cut by about 5 to 6%. So yes, volume growth, that weakness in volume growth, that's weighing on Hyundai Motor, and hence Citi has maintained that long-term constructive call, but in the near term, it sees some demand and pricing pressure to weigh on the stock, and hence the stock is trading about 2% lower.
All right, moving on then to the next counter that is in focus, and that is Dr. Reddy's lab. Now, the US FDA has concluded both a GMP inspection and a pre-approval inspection, or PAI, at the company's formulation facility located in Andhra Pradesh. And the inspection took place between 4th and 12th of December. On the back of this inspection completion by US FDA, Dr. Reddy's is in focus today. Currently, it's trading at the highest point of the day with gains of 0.2%.
All right, so that's Dr. Reddy's for you. But moving on to the next counter, Akshay, you've picked out SRF for us. It's been one of those volatile counters in the in the past year or so on the back of those US tariff uncertainty that's been there for the chemical sector. But today the stock is down about 1%. But from here on, where do you see the stock headed?
Yeah, so if you look at the price structure of SRF, it's been almost 1 year that the stock has never gone below the levels of 2,800. Time and again, it's been rebounding from those levels of 2,800. There is good volume action, and the entire price volume structure is suggesting that there is good accumulation in the stock around the support zones, which make it more lucrative for a trading pullback, which can see the stock heading all the way for levels of 3,200 plus. So continue to hold or buy from a short to medium term perspective. 3,200 plus seem to be in the making in SRF.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll get you more buzzers on the other side. Stay tuned.
Avada, always clean, always on.
होम EMI 50,000
आउटगोइंग तो जा रही है, आपकी क्या तैयारी है? पूरे सीलिंग का 20,000 आउटगोइंग है जा रही, आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Exquisite comfort, bespoke hospitality, culinary excellence. Big words, huh? Trust me, the experience here is far bigger. That's Air India now.
Hi there, welcome back to ET Now. You're watching Market Fatafat with me, Kanishka Sarkar and Ankita Saxena, and we're addressing all the top buzzers in trade today. And let's get back to all of them. And Akshay, you've picked out GMR Airport for us, trading pretty well in trade today. And if you look at the past 6-month trend, a solid 25% of gain over there. Do you expect this upside to continue in 2026 as well?
Yeah, absolutely. So a very strong price structure for GMR Airports. If you look at the last 4 weeks of price action, the stock has given a positive price volume breach at the levels of 100. This is a very strong development in the stock. Now 100 is the short-term support base which the stock has set, and now the target probably moves for 125 to 130 from a short-term to medium-term trading perspective. So it's a hold, possibly 125, 130 is the target zone you can look forward to.
Alright, so 130, that's the target zone we're looking at for GMR Airport. But let's put the spotlight on another aviation counter, Indigo. Well, this one again in the spotlight because Supreme Court has refused to hear a plea on the airline's recent flight disruptions. It is said that the matter is already before the Delhi High Court and parallel proceedings should be avoided. Now, what's the issue? It's that Indigo has faced pilot shortages and delays in implementing the new flight duty time limitation rules, and that has led to operational disruptions. However, let's also see what brokerages are making of it, and Elara is the latest one to have come out with a note. While it has maintained the buy rating, the target price to 6,020 rupees. That's down from 7,241. It says there's lower near-term capacity and earnings assumptions for Indigo. However, the pilot shortages, they seem temporary for the next 2 to 4 quarters. Also, nearly 10% of winter capacity cut. That could also support the airfares. It says that Indigo remains the only airline to with assured aircraft deliveries, that is nearly 50 planes annually for the next 4 to 5 years. So yes, the bottom line, Elara says, is that near-term challenges persist, but overall, the long-term growth story, that remains intact. And on the back of this, Indigo is actually one of the top gainers. In fact, the top gainer on the Nifty pack today, trading more than 2% higher.
All right, so that's Indigo that has made a comeback in the trading session today. But let's move on to the next counter that was doing well was Ashok Buildcon. That was up 3% in the morning trade. In fact, still managing to hold on to gains of 2%. It is after the company formed the joint venture, received an LOA from BMC. Now, the bid price for this project has been 1,041 crore rupees, and Ashok Buildcon has a 50% share in the GV that has received this order from the BMC. On the back of this order win, Ashok Buildcon is in focus.
All right, so that's Ashok Buildcon for you, up more, nearly 2.5%. Akshay, next up is Dixon Tech. Now, this one is trading pretty well in trade today, nearly 3% of gains for that matter. But if you look at the past 6-month trend or the year-to-date trend, it's been in that declining territory. In 2025, it has lost over 23%. So it's been a declining trend. But do you expect a turnaround now?
Yeah, absolutely. There's a very good chance of a turnaround on the technical charts because if you see the lowest price point, I think somewhere in April 2025 was the point where we hit the low of 12,200 and we had a very strong recovery all the way till 18,000. Similar kind of a price pattern is unfolding. Very strong volume participation at the levels of 12,300 noted 3 trading sessions back. After that, we have had a one-way rally of almost over 1,000 points from the bottoms. And I think this is a good trading setup from a positional or a medium-term perspective where minimum targets of 15,500 plus can be achieved. So suggest to do bottom fishing or continue to hold Dixon Tech where a good strong recovery is seen in the coming days.
Alright, so it's called for bottom fishing for Dixon Tech. That's the word coming in. But let's move on and tell you what's happening with PVR Inox. Now, this company's shares surged nearly 6 to 7% in trade today. That's after blockbuster performance of Ranveer Singh starrer Dhurandhar. That has lit up the box office. Now, this film has crossed 300 crore rupees mark in just 9 days, making it one of the fastest Hindi films of 2025 to achieve that milestone. And on the back of this, box office collection, PVR Inox has been trading higher, but however, it has given up those morning gains and is currently trading about 4% higher. Apart from that, PVR Inox has also added 5 screens in Hyderabad. So that's also lending support to the stock, and hence it's trading about 4% higher right now.
All right. Let's talk about the next stock that is in focus today, and that is Vodafone Idea. Now, according to a report in ET, the government is likely to offer an interest-free moratorium of 4 to 5 years to Vodafone Idea on over its 83,000 crore rupees of its pending statutory dues that's linked to adjusted gross revenue or AGRs, giving an immediate relief to the cash-strapped telecom operator. Now, remember, this could actually, after the reassessment, the major could actually end up paying nearly half the amount, and that's easing its cash stress and improving chances of fresh capital infusion for the telecom major. Now, Vodafone Idea was doing well in the morning trade, but it has succumbed to selling pressure as of now at the lowest point of the day, with cuts of 1.8%.
All right, so that's Vodafone Idea trading right now with cuts of nearly 1.8%. But next up, Akshay, you've picked out IndusInd Bank for us. The stock is trading in the green today, but if you talk about the whole year, it's been a very muted trend for the company because there were regulatory concerns that were highlighted earlier in the year. There has been a downtrend, but now do you expect some upside?
So this stock has been in a downtrend. It's now in a process where slowly the accumulation phase is on. That's what my reading is based on the price volume charts. Last 4 to 5 weeks has seen the stock pivoting around the levels of 850, but I feel that the stock is heading for a possible breakout above the levels of 900. So right now, with a conservative target of 900 for trading is the first stopover point on the upside. After 900, it unfolds a new dimension where a strong breakout, if it matures, sets up a target of 975 to 1000. So till the levels of 800 are held, I would maintain a positive view on IndusInd Bank for positional targets of around 975 to 1000.
All right, that was the last stock of the day. Akshay, thank you so much for taking the time out and joining us with all your picks. But with that, it's a wrap on this edition of Market Fatafat. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere because closing trades is coming up next.